A last-hour surge on Dalal Street saw the Nifty and the Sensex end at the day's high point. Both indices gained nearly 0.5%. Banks underperformed the blue chips, but mid-caps continued their outperformance.
Dalal Street sees a frenzy of block deals with large trades on Aditya Birla Fashion, Alkem Labs, Indegene and Tata Technologies. This comes on the back of 5 large trades that we saw yesterday, which included Ola Electric, Yes Bank and Vodafone Idea.
In stocks and news, SPARC tanks 20% after its key psoriasis drug fails trials, while PI Industries soars 4% after its biggest customer, Kumai Chemicals, revises its outlook higher.
Hello and welcome to a fresh new edition of Markets Forward, your go-to show. We get you up to speed with what went on today and we set you up for tomorrow's session. I'm Nigel and with me is Rima. Hey Rima.
Hi, all in all a good session, right? Midweek, but we're closing up at the day's high.
Well, that's right, Rima, and in fact the indicators were there today and, just to tie in with what was my thought process at the start of today. That's why you got a bit of a green tinge on the screen, both my jacket as well as the markets. So in today's trading session, you had the PCR that had moved to the lower end of the range, which is around 0.65 approximately. The FI is aggressively net short, and also you had the India VIX that continues to cool off. And the VIX cooling off normally is a bullish indicator. So we had a good run today because of those technical indicators. The Nifty Bank, that was the star batsman actually that was missing in action because that underperformed. But what made up for the Nifty Bank's underperformance today was Reliance Industries. That's a large weight. That went home with gains of closer to 100%. And you have Jio Financial as well that derives most of its value from Reliance Industries. That one as well had a good run today. The advance decline ratio as well was firmly in favor of the number of stocks that were advancing. So you had closer to 1,500 stocks that were advancing. By the end of trade, actually, they pretty much evened up. But there were a lot of winners from the broader markets. Short point, headline index continues to remain in this 600-700 point range. 24,400 approximately on the downside, on the upside 25,100. But don't get fixated on the headline index because individual stocks are doing a thing of their own. For us to break out of this range on the Nifty, I think will require a bit of a positive trigger. But Rima, a good trading session.
Indeed, the mid-cap index up 0.7%, small-cap index up close to about 0.8%, and so many themes under the index level which stole the spotlight. So whether it's defense names, whether they're railway stocks, whether these quick commerce companies, lots of themes were bubbling with excitement, price action and volume. But let's tell you what we have for you on our show today. We start with the top movers and shakers with Vivek. Block deal frenzy continued on Dalal Street. Big trade scene in Aditya Birla Fashion, Alkem Labs, Indegene. Shares of SPARC and PI Industries also buzzing in trade. And as always, we'll get you the key market events to watch for. But first up, let's get a handle on all the big stock movers on the way up and on the way down with Vivek.
Well, thank you so much for that. Well, a session where you actually saw very positive market breadth, advances far outpacing declines, especially the broader end of the market. In terms of the top gainers, well, the entire railway pack today was in focus. All of the railway stocks saw very, very strong up moves. Look at names like Aircon, Railtel, both up over 10% in the session, and the other stocks too moved higher in the session. The other stock that did quite well was one from the agrochem pack, PI Industries, key client going ahead and upgrading its growth forecast for the coming year. EBITDA guidance also, edged up higher. On the back of that, PI Industries ended higher by over 4%. The entire quick commerce space, both internal as well as Swiggy, did quite well. Swiggy up almost 9%, one of the top gainers as far as the NSE 500 index is concerned. And one from the shipbuilding space, Garden Reach Shipbuilders, positive news flow coming in. The company signing an MOU with a Norwegian company. And on the back of that, this stock higher by 6.5%. And to top of the list of gainers, Policy Bazaar, one of the top gainers as far as the F&O space was concerned, today up almost 6%. But quite a few losers as well, mainly all of the stocks that did see significant block deals take place, most of these stocks ended lower in the session. Look at names like AB Fashion, almost down 10%, Indegene down 5%. So all of these stocks did see selling pressure emerge after the blocks took place. Chola Financial, very interesting, in one of the conferences, the management went ahead and gave a guidance which was towards the lower end of the guided band at the end of Q4. And on the back of that, that stock was one of the top laggards in the F&O space. And lastly, Karur Vysya Bank, one of the top laggards as far as the small cap index was concerned, down over 2.5%.
Okay, all right, Vivek. Thanks a lot for that. Well, let's welcome our guest on the show. We have Mayuresh Joshi of William O'Neill and Shrikant Chouhan of Kotak Securities who joins in. Hi, gentlemen. Good to see you all in. Thanks a lot for joining in. Shrikant, what's your take? Still stuck in the range? Do you think that since we are still towards the lower end of the range, you'll continue to buy the Nifty?
Good afternoon, Nigel. Good afternoon, Rima, and everyone. I think, today the market has formed some interesting formation. It has spent nearly 17 days within the range. But today's range, if we consider, then it's a narrowest range of last 17 days. Also, if we consider Bank Nifty, then there also we saw completely sideways activity, but in a very narrow range of just 200 points. So such type of formation results into some breakout sort of formation. And the way the market has spent time at 24,500 since the last 3 days, I am of the view that now the market has also eroded the intensity of falling further. So maybe tomorrow, in case if there is any lower opening, it will be an opportunity for create some long positions. That's my view. But in case if there is any gap up opening, then I think again the market can move towards the levels of 24,800 or 850. So tomorrow it's an expiry day. I am of the view that tomorrow the market is going to cross its range on the upward side.
Okay, the Nifty will break out on the way up. That's Shrikant's view. But let's talk about some of the big moves. Vivek is still with us. Vivek, lots of block deals this week. I think there were 4 or 5 yesterday, 4 more today. Take us through that.
Well, that's right. So the block deals, immediately post the earnings season, quite a lot of supply coming in as far as the secondary market was concerned. First on the list was Aditya Birla Fashion. Remember, Flipkart held a little over 6% stake in the company. Aditya Birla Fashion is the demerged entity, so one entity is still yet to list. What actually transpired was that over 6% equity traded hands and over 600 crore was the value of the block deal. The other stock on focus was Indegene. Almost 1/10 of the company exchanged hands today. One of the pre-IPO private equity investors, Carlyle, which held stake under CA Dawn, that particular entity sold over 10.2% stake, and they managed to garner a little over 1,500 crore rupees via this particular block deal. Tata Technologies, another one, very interesting given the fact that TPG Rise, held over 6% of the equity at the end of the March quarter. They trimmed almost 5%, 4.9% to be precise, in April, and after that today they've gone ahead and sold a further 2.1% equity. Thereby, now post today's block deal, TPG Rise won't have any stake left as far as Tata Technologies was concerned. And lastly, Alkem Labs, interestingly again, the promoter here trimming the stake, a promoter by the name of Jayanti Sinha, offloaded almost 1.4% equity stake in Alkem Labs today. Most of the stocks that you're discussing ended the session lower after the block deals took place.
Okay, all right. Thanks a lot for that, Vivek. Well, let's go across to Mayuresh. Mayuresh, it's raining blocks. Some of these sometimes provide entry opportunities. Any of them on your radar?
No, none out of this list, Nigel. Again, I think outside blocks, I think what we'll largely focus upon, as the markets do, will be how earnings are expected to play out and how earnings resilience would largely map out. And that will be the base construct case for us. And if that comes along with good prices and good valuations, I think that'd be a deadly cocktail. So none out of these blocks that I'm looking at this.
Talking about cocktail, what all do you like from the beverage space? What's your top pick? I think Radico, if I'm not mistaken.
Yeah. I did discuss that, Nigel. That remains one of our top picks, and it remains both in our global as well as local portfolios. Obviously, I think the expectations in terms of premiumization as a trend should largely continue. What you also seen in terms of pricing, specifically in terms of both the premium and the super premium products, should see some element of increases with state hikes or otherwise in the next few quarters. And therefore, I think with input costs staying benign, the margins, both in absolute terms as well as pure margin expansion expected to take place over the next couple of years, might be a base case scenario. So yeah, Radico is something that we continue holding in our portfolios, which generally I think this alcohol beverages theme should continue to.
Got that. Let's talk about some of these stocks. Vivek spoke about them, but in greater detail. So SPARC was down more than about 15%. Sun Pharma was also weak in trade. For SPARC, one of their key drugs, psoriasis, that failed trials. Ekta is here with the details. Ekta.
Thanks for that. Well, yes, both these stocks are in focus, Sun Pharma as well as SPARC. SPARC is the R&D arm, which is listed separately of Sun Pharma. Now, Sun Pharma announced the top-line results from the phase 2 trials of SCD-044, which is basically a molecule under development. It is basically being studied for psoriasis as well as atopic dermatitis. The drug has not met the primary endpoints in either study, and the development of this particular molecule is now being discontinued. No further clinical trials are being planned. Sun Pharma and SPARC will be assessing next steps for the compound going forward. Now, in terms of SPARC, what the impact is that SPARC has licensed the molecule to Sun Pharma, and they were expecting the phase 2 results to come through and were due in Q4 of FY25 and Q1 of FY26. The stock has run up over 70% from March to June of 2025 in anticipation of these results. Now, analysts say that one of the more advanced molecules, this is one of the more advanced molecules in SPARC's pipeline. Now, what will happen going forward will be a couple of key things to watch out for SPARC. Other molecules in their pipeline, for example, SCD-153 or SBO-154. They are also overall looking at cost cutting. They're cutting manpower, for example, by around 30-odd%. The company says that as of December 2024, said that there is available debt and cost optimization, which will provide them a runway till May of 2025. And the expected milestones were expected to defer the imminent need for fundraising. The stock, however, is down 35% from its 52-week high, which it hit in July of 2024. So these are a couple of key things to watch out for. When exactly will they need to raise funds going forward? What would the other molecules in the pipeline look like for SPARC?
All right, Shrikant, the stock ended down 20% today, but do you see any kind of support over here?
Yeah, Nigel, I think the way the stock has broken its important level, it was like holding comfortably above the levels of 165. But today, after this news flow, which is certainly like negative, but because it closed below the levels of 165, I think the next level to watch out for would be 125, 130. So fair chances of stock falling towards the levels of 130.
Okay, let's get in another story, and that's PI Industries gained over 4% after one of its major customers, Kumai Chemicals, revised its outlook higher. Positive rub-off impact on PI Industries. Ria joins in to tell us how it's boosting the prospects for PI Industries.
Well, yes, PI Industries was one of the stocks in focus today. The stock jumped up almost 5% at one point in the session after its major customer, Kumai Chemicals, revised its outlook higher for the year ending October 2025. Now, the revenue outlook has been revised upwards by 9% and EBITDA by 34%. And remember, Kumai Chemical is the biggest customer of PI Industries, which is why we saw such a big move in the stock as a result of this. Now, Kumai's March quarter results were also better than street expectations. Its sales gained about 10%. Operating income also saw a surge of around 36%, and even the net profit jumped up by around 64% compared to the previous year. PI Industries, on the other hand, on the 21st of May, reported quite a weak set of numbers in quarter 4, which is why it saw some selling pressure after the results. And the guidance was also weak for PI Industries. They guided for single-digit growth for the CSM business for FY26, which was below street estimates. Today, of course, after this new development, the street has been reacting positively, and the stock closed 4% higher today.
Thank you very much for that. Mayuresh, just a while back, you were telling us how Deepak Fertilizer has made it to your list. So in the entire agrochemical space, how does PI Industries feature? And would you set a lot of importance to this update about how one of its clients has raised the guidance?
It's a very positive development, Rima. And obviously, I think it will rub off effectively in terms of revenue growth. Obviously, I think the guidance that they've given for FY26 is still low single digit. But the expectation here largely is for PI that the numbers should start stacking up on a reasonable base. And therefore, I think the next few quarters, there should be a steady state improvement. Obviously, you've seen gross margins improve in the previous 2 quarters. Quarter 4 was a decent expansion, as you saw. On an annualized basis, EBITDA margin stood at 27%. The expectations in terms of cash being on their balance sheet in excess of 4,000 crores is a huge positive sign. And obviously, the foray that they're probably making, specifically in the CSM business, which is the high specialty business as we speak about, they've commercialized 15 odd molecules. They're expected to commercialize 90 molecules more as we speak over the next few quarters and years. And that can be a significant step. in terms of their specialty portfolio within CSM actually doing very, very well. So yeah, I think valuations have become a little bit more cheaper as we speak if you compare that to a couple of years back. And therefore, I think the expectation from an earnings perspective is that there should be a steady state show the next 2 years. We continue holding this stock in our global portfolios. We don't hold this in our local portfolios.
Shrikant, 4% up. Is there more upside in PI Industries?
Yeah, it looks like, Rima, because the stock is bouncing back sharply. It was around 4,700 levels in the month of October 2024. From there, all the way it fell to 2950, and now again it is recovering back sharply. So it's a V-shaped sort of recovery that we are witnessing. And whenever we see such type of activity, most of the time stock tries to retrace 80% of the fall. So based on that, I am expecting stock to move towards 4,300. And in the best case scenario, it may even cross the level of 4,700, but at least 4,200, 4,300 is the next level to watch out for. I think if someone is holding to the position, I think they should hold on to it.
Got that. The other big mover in the large cap space is Bharti Airtel, and this is on the back of a bullish note by Macquarie. So according to Macquarie, their target price for Bharti Airtel is 2050. But they've also listed out scenarios. And in the most bullish case, where the average revenue per user for Bharti Airtel by FY27 rises to 300 rupees, in that scenario, they're saying the target price for Bharti Airtel rises to 2350. And this bull case, according to them, has a 40% probability of playing out. So which is why they're fairly bullish on Bharti Airtel. They do a weighted average. They're saying there is a base case. In the base case, target price is about 1950. So a little bit of an upside from current levels. In the bear case, the stock heads down. But the weighted average, because they're assigning a 40% probability to the bull case playing out, turns out to be 2050. And they're saying Jio's listing, potential listing, could be supportive for the valuation multiples for the entire sector. Mayuresh, we've spoken about Bharti Airtel in the past, continues to do well.
Yeah, and the expectation is that it might continue doing well, Rima, because the base case scenario that is getting played out is that all the tariff increases that you've seen in the recent past, they have got gestated by the market. And as more tariff increases push through happen, then there is some element of a base effect that kicks in terms of tariff prices. You're probably going to see that operating leverage kick in. Obviously, from an SMS and an RMS perspective, the subscriber market shares has remained steady for Bharti Airtel. The revenue market share is expected to show some signs of stability and improvement as we head into the next few quarters. And obviously, I think as ARPU increases happen, the obvious element in terms of deleveraging on the balance sheet becomes very, very incremental for cash flow improvement, which again improves the return ratios quite significantly. So it has a dream run. I think one of the best performing stocks as far as Nifty is concerned. But the base case scenario is that ARPU increases will play out. And if they play out, that will turn out to be an operating leverage element onto their balance sheet. So yeah, anybody holding should continue holding.
Okay, all right. Thanks a lot, gentlemen, for joining in. Mayuresh as well as Shrikant for joining in, giving us your view on markets and the individual stocks that we did discuss. Well, before heading into a break, let's hear out Zerodha founder and CEO Nitin Kamath. He says that they expect a 10 to 20% decline in the broking business, but adds that it may take time to materially impact their revenues. Let's listen in.
Broking business as such, I think, will still be down like 10-20%. But that said, we are kind of investing into other startups, and these startups have now maturing. So like there's insurance startup, there is AMC, etc. So I guess it has to be given some time for it to materially start impacting our revenues as such.
Welcome back. You're watching Markets Forward, and now let's take a look at the key corporate voices that we had over the course of the day. So first up, GE Shipping Executive Director and CFO G. Shivakumar said dry bulk shipping rates have begun to recover while tanker rates remain soft. In one specific trade was impacted by tariffs was LPG, which slowed down temporarily but has since rerouted and adjusted. He also added the tariff-related issues are having some impact on the company's overall growth. The company's oil trade remains weak, along with iron ore and coal shipments.
All right, next up, Mastech management said that the company's aspiration is to reach a margin band of around 17 to around 19%. They also add that some of their older NHS projects, which had previously been suspended, have now started moving forward.
And finally, Garware Technical Fibre plans to grow its net profit at a CAGR of 15%, with the top-line growth expected to follow a similar trajectory. The company anticipates margin expansion of 50 to 100 basis points per annum and aims to improve its return on capital employed, or ROCE, from the current 25 to 30%.
Well, before we wind up on the show, let's set you up for tomorrow. To help us out with that, Vamakshi joins us to tell us all the key events that she's tracking. Vama, take it away.
Well, Nigel, tomorrow happens to be World Environment Day, so, just a short reminder for us to go green. But apart from that, as far as economic cues are concerned, we'll be keeping an eye out on ECB interest rate decision. This is ahead of the RBI decision that is scheduled on Friday. US initial jobless claims will be another data point that we will be watching out for. Now, back home, Rallis India as well as Jindal SAW, these two counters will be in focus because they go ex-dividend tomorrow. As far as some other important events are concerned, when government sources are saying that US trade delegation is scheduled to visit New Delhi from June 5th and 6th. The NATO defense ministers meeting is also scheduled in Brussels. So that is another important meeting that we'll be watching out for.
Okay, all right. Thanks a lot for that, Vama. Well, on that note, though, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side. Don't go anywhere.